So Mr. Koh Huat Soon, he is the head of research. Hi.
Hi.
Morning, Mr. Koh.
Morning. Looks like you're having a very educational morning, eh?
I am, and it's a bit sleepy because, as you know, all of us were reading through the lines of the budget 2022 and all the analysis that came out with it last night. As I'm sure you were, I don't think you even slept. Did you sleep?
Half an hour, maybe.
An hour. So, Mr. Koh Huat Soon,
doing slides last night.
Yes, once we actually dissected everything, then we're going to have a trading idea based on warrants, but we'll wait for your research report to come out first. And then for how it works is we work with Kenanga Research and we recommend warrants. So everything jives together. So Mr. Koh, you actually have a whole team of research analysts underneath you, don't you?
Yeah, big team. Got about 25 in the team. Not all are analysts, we've got economists, support staff, and so forth. Yeah, but we've got a big team. You're right.
And how many stocks do you have to cover for budget 2022?
Well, not particularly for budget, but overall we have about 132 stocks. And in Malaysia, we cover the biggest number of Malaysian stocks.
Kenanga does have the widest coverage, which means you have the sharpest eyes to look at every single one because your signature is on all of them.
Hopefully. Yeah. Thanks.
All right, Mr. Koh Huat Soon, over to you.
All right. Yeah. Thanks, Isabelle, for inviting me to quickly share some thoughts about the budget 2022. First, let me try and get hold of the slides onto the screen. You can just bear with me for a bit. Okay, we had a big budget announced yesterday. The Minister of Finance delivered the largest ever budget. In terms of the total expenditure, the government is prepared to spend something like 332 billion. And this goes to mainly to support the early phases of recovery that we are witnessing at the moment. I think it's important for the government to keep the momentum going, and at the same time also provide achieve a sort of a social agenda in providing financial support for the financially challenged. By this I mean the B40s and the SMEs and so forth. Yeah. As I said, it's a very large expansionary budget that was announced, and the total expenditure was 332 billion. I think the thing that surprised me was the improvement in the fiscal deficit, despite the enlarged expenditure. Last year, the expenditure was only 320 billion, and sorry, not last year, actually, we're talking about 2021. The expenditure is about 320 billion. And we are going to end up this year with a fiscal deficit of about 6.5%. So next year, the government is projecting that with 332 billion expenditure, we are going to be able to achieve a deficit of only 6%, right? And I think the reason for this is that the amount that's going to be allocated for COVID-19 has come in lower than what we thought. We thought that the government would be spending 45 billion, and they're coming in more like 23 billion. Yeah. And also in terms of development expenditure, they're coming in a bit lower than what we thought. So it is a happy situation that fiscal deficit is not widening beyond 6.5%, because earlier on we were projecting that the government may have to put up with 7% deficit. So this is very good news to see that they are looking at 6% next year. And with that kind of numbers, we feel that the government is operating next year's budget within very comfortable limits. For example, it will take the statutory debt to GDP ratio up from 60% this year to 63% next year. And that's below the 65% ceiling that has been raised in just recently by Parliament. And also in terms of total debt to GDP, I think it's a comfortable number. It's going to end next year at about 67%. So things are looking okay on that front. And I think just to add also that if the government needs to borrow more money, it's a very good time to be doing so, because as we all know, the bond markets are trading at very low interest rate at the moment. And of course, there are concerns that the US taper is going to start, and bond yields could go up. But I think what's working in our favor, to our pleasant surprise, is that commodity prices are very, very strong. We've got CPO exceeding 5,000. Brent is now about 85. And our trade surpluses are looking quite good. The export figures in recently have been actually very encouraging. So good environment to be raising money. What I'm going to do is that I'm going to divide this very short presentation into two sections. I've just covered the economics, and I'm going to move on to the market. Okay. Generally speaking, I think the budget that was announced yesterday is actually a positive for consumption. The reason why I say that is because the government is continuing to dish out financial aid to the financially challenged. So I think you should keep the demand for essential goods fairly buoyant. In terms of the size, the government is going to spend 8.2 billion compared to only 7 billion last year. That's about a 17% increase. And also, I actually had expected that the EPF contribution by the employee would be normalized to 11% next year from 9%. So it's a pleasant surprise that the finance minister has extended the 9% to the middle of next year. So we've got the extra 2% to spend essentially. And I think there's some good news for the auto sector, because they've extended the sales and service tax holiday for auto purchases for another 6 months, right? So from 31st December, they're extending it till the middle of next year. And also there are incentives for electronic vehicle ownership, right? For example, they're giving 2,500 tax exemption for spending on subscription for electrical charging stations, and also excise duties and import duties for electrical vehicles is also going to be exempted for the rest of 2022. So these are positives for the auto sector. And I think three issues that play very strongly for the equity market are these three things here. The first is the Cukai Makmur. I'll call that, translated directly, means prosperity tax. It's a form of a windfall tax, except that this is applied broadly. I'll come to that later. The second issue is the adjustment to windfall levy threshold for the plantation sector. And the third one would be I think Isabelle mentioned earlier on, the increase in stamp duty on contract notes, and how that would impact the volume of trades on the Bursa Malaysia. Okay, on Cukai Makmur, basically the government has said this, for the first 100 million of taxable income that a corporate earns, it will be charged at the normal corporate tax rate of 24%. But anything above 100 million, the excess over 100 million will be taxed at a higher rate, 33%. So essentially, the marginal tax over 100 million increase is actually 9%. So obviously, this would have a negative impact on the earnings of the large companies listed in Malaysia. There won't be impact on small companies, obviously. But these are for companies that earn more than 100 million a year. So we estimated that for the 30 KLCI stocks, for example, on a sort of a total aggregate basis, it will hit earnings by around 9%. But fortunately, this is a one-off measure. It's not a sustainable measure. It's just one-off for next year. So the impact on the KLCI, in my mind, would be quite muted, because it's a one-off. So with originally, before the budget yesterday, our target for the CI is 1611, and that's only been revised down to 1610, right? Sorry, 1600, sorry, from 1611 to 1600. So a minor, mildly negative impact on the CI. Now, on the issue of windfall levy adjustment for the punters. Now, a bit of background here. The government earns a windfall tax on CPO, crude palm oil, if the price of CPO exceeds 3,000, 3,000 per ton for Peninsular Malaysia, and 3,500. Okay, sorry, before yesterday's announcement, right, the threshold for Peninsular Malaysia was 2,005. Now that's being raised to 3,000. Okay, so prices above a higher threshold would mean that the windfall levy is reduced. Yeah, so that's the situation with Peninsular Malaysia. Surprisingly, the Peninsular planters would benefit from yesterday's measure because they've raised the threshold, the price threshold for the tax. Now, for Sarawak and Sabah, the threshold used to be 3,000. That's also raised by 500 to 3,005. So on that front, it's good news as well, right? But they've increased the rate, the tax rate for the East Malaysians from 1.5% to 3%. So the net effect is this: the impact of this adjustment to windfall levy threshold is actually quite negative for the East Malaysian planters because the rate has been doubled from 1.5% to 3%. But it's actually positive for Peninsula because the threshold has been raised, but the rate has been maintained at 3%. So that's the second part I want to talk about. So obviously, if you have plantation stocks, right, do be prepared for some perhaps weakness on Monday for those planters that are exposed in East Malaysia. So, for example, Ta'an is a pure Sarawak planter. Hapsing plant is a pure Sabah planter. Ta'an is also, Jaya Tiasa is also Sarawak. So these three will probably be hit the most. But the ones that are skewed more towards Peninsula would gain, obviously, like Felda, for example, or Sign Plant. Or those with large tracts of land in Indonesia might not be hit so badly. Okay, the third point is this: the increase in stamp duty on contract notes. I think it's quite a complex matter. Basically, I'll try and explain it here. Right, the transaction costs, right, for trading in the Bursa comprises of two things here. One is the stamp duty, which at current rates is 0.1%, subjected to a ceiling of 200 ringgit. Yeah, and the second component is obviously brokerage rates and a service charge of 6% on the brokerage, right? So, for example, if a trade is very large, and I'm a retail investor, I get charged 0.5% brokerage, right? On top of the 0.5%, I pay 0.03%, which is the service charge, service tax component. So I pay 0.53%, and if the trade size is large enough, it will overwhelm the 200 ringgit ceiling, on the stamp duty side. So if effectively I'm actually paying something closer to 0.53%, yeah. But with the budget that was announced yesterday, that $200 ceiling has been removed. That's one, and the rate of stamp duty has been increased from 0.1 to 0.15%. So that component of your transaction cost has risen tremendously, right? So that using the example of 0.5% brokerage rate, I add 0.15%. My transaction cost now is 0.65% compared to what I used to pay, which is 0.53%. So the additional transaction cost in percentage terms that I'm paying is 0.12% only. And I think I share Isabelle's view earlier on when she said that 0.12% is really peanuts. For people looking for returns that are like 10%, 30%, right? It's something very tolerable. I think from the experience of an institutional investor, large institutions normally look for about 10% return in a year. So to bear with another 0.12% may not be really that painful. But I think it might impact the day traders, for example, who trade on very sort of minute margins. So those guys will feel the pinch. 0.12% may mean a lot to them if they're trying to make profit on a daily basis. So high frequency trading may be a victim of this measure, but by and large, those long-term investors, the large institution funds, probably will not shake them off too much. And also, in terms of the proprietary day traders, I believe they don't work on contract notes, so they won't be affected by this as well. But on balance, I think there could be a slight negative impact on volumes that could be negative for stocks like Bursa Malaysia, for example. Yeah. So yeah, this is all. This is sort of the few bullet points that I would like to share with you this morning. I don't want to take too much of your time. I think I've surpassed my 15-minute allocation for this talk. So Isabelle, it's back to you now.
Hey, Watson.
Hi.
Thank you so much. I'm quite sure that if you'd like to speak for the next 1 hour, we would be very happy to have you. So don't worry at all about the 15 minutes at all.
Another time.
I'm just saying 15 minutes is not enough for you. But I know you're a busy man and you have to have that research report out by today. So let's get straight to those 3 questions which I've choose for you, and then you can get back to work. So we have Yuk Long Liu. If you can see the question below over there, which sectors will benefit from Budget 2022? You've covered that part. But which sectors should be avoided after Budget 22 and why?
Well, I think what was disappointing was the lack of mention on the construction projects. The operating expenditure was huge. The government said that they were prepared to spend 79 billion on OPEX. When they announced 69 billion OPEX, pardon me, it's development expenditure, DevEx, yeah. For 2022, they are allocating 79 billion for development expenditure. That's huge. And compared to this year, development expenditure is 69 billion, and even this year, 69 billion was actually considered quite huge by historical standards, right? So with that kind of size, right, there was no mention of plans to kickstart the large mega projects that would excite the construction sector. For example, MRT3 or the Penang Transport Master Plan, or even the ECRL. There was total silence on those projects. So it gives the impression that perhaps, although development expenditure is large, it might be going to smaller scale projects that don't really benefit the Gamudas or the IGM of the world. And if you look at the 12 Malaysian plan, right, one of the agendas for the government was to actually bridge the level of development between the rural areas and the developed areas. By this, to put it in simple words, I think the thrust of 12th Malaysia Plan is to basically bring up the development of states like Sabah, Sarawak, Kelantan, Perlis, right? And so the amount that's supposed to feed into MRT3 and HSR even, which is now shelved, I think quite certain to be shelved, is not there. And even if MRT3 comes back, we strongly believe that it's going to be on a different, on terms which are not as attractive as MRT2 or MRT1 for the developers of the project, like Gamuda. Because of the tightness in the government's budget, these construction companies may have to bear more financial risk and probably put up with lesser margin. So for those reasons, I think construction sector is not something that's looking attractive at these levels. But where it's interesting would be, I think I'm still a fan of technology. I think there is a sustained interest by the government to encourage digital payments, for example. One of the measures they announced yesterday was to start off e-wallet payments for youth 18 to 20-year-old. They'll be paid $150, per person to start them off on e-wallets, and I think that's very encouraging. And it's not the first time the government is doing this. They've done this in the last 2 budgets as well. And they've also adopted a policy for that all transaction payments involving the government has to be eventually done via digital, and no longer deal with checks and cash for obvious reasons. So all that is actually very, very positive for the digital payment service providers like GHL, Revenue Group, and so forth.
Brilliant. Thank you so much, Watson. And yes, about the construction sectors, there was some news about Penn, Borneo, etc. But I hear you. From Munira Marzuki, post-budget 2022, and as a country in the recovery mode, how do you forecast the market direction? Will the volatility remain as there are other outside catalysts that may have an impact on our Malaysian market? And also, well, Munira is asking many questions in one.
Yeah.
Also, will foreign investors shy away from entering Malaysia upon the 2022 stamp duty imposed?
Oh, that's a very loaded question, Munira, but thanks for the question. I think on balance, right, I feel the budget was probably mildly negative, like what you mentioned, the impact of stamp duty. I don't think stamp duty is going to be a big deal for large, long-term institutional investors like the foreign investors. It could reduce day trading and high-frequency trades, yeah, and those the preserve of those investors or traders are largely small caps and speculative stocks, right? So I think maybe the foreign investor is not so much impacted by this measure in itself, but if you've been following flows into the market, you realize that foreign investors have come back into Malaysian equities only recently. We've had October marks the 3rd straight month of inflows by foreigners, and to me that's not surprising. I think 2 reasons for that. The first, most compelling reason is because commodity prices have recovered, and Malaysia fortunes is actually highly geared to prices of Brent and CPO. Do you know that 25% of the government revenue is linked to oil? The higher the oil price, the more the government income is. So that's highly positive for our fiscal position. And the other reason, I think, could be the fact that today the politics is more stable than what it used to be 6 months ago. I know we're all from different camps, right? But let's put that aside. I think it's hard to disagree that since the recent change, there have been a lot more calm in terms of the political landscape. Both sides of the divide seem to be working together. So that's the other reason why foreign investors are back. So I think we should look beyond the budget 2022. The government needs to raise the money because it needs a fund to bridge the gap between the high expenses and the lack of revenue. So that's understandable, I suppose. In
terms of just drilling down on what you mentioned earlier, with the high prices of crude and Brent, right? And yes, it benefits the government, but does it benefit the oil and gas companies like Dialog,
Yes.
Hibiscus, Heng Yuan?
Yeah, I think that's a good question, Isabel. I think we think that the winners would probably be the drillers, the guys who are on the upstream side. You see, oil prices can remain high for a longer period, right? That would encourage exploration. So those guys involved in chartering the offshore vessels, support vessels, OSVs and stuff like Icon, Coastal Contract. Those guys would benefit. Dayang, and Petronas. Do not forget, Petronas is a major corporate in Malaysia. The government gets 25 billion at least dividends year after year from Petronas. And if natural gas can remain at these levels, right? I think it's $30 per MMBTU, and Brent is 85 for a while longer. FY22 is going to be a very, very good year for Petronas, and they might well dish out dividends that could be surprised on the upside. I think oil and gas is an attractive sector to be considering. And I think in a twisted way, it is good that not many people believe that this oil rally can last for long. But I personally think that the Brent could remain above 80 for at least another 3 months, if not 6 months, simply on the fact that the global economy is opening up quite fast, isn't it? Planes are going to start to fly in a big way, and I think, again, in a twisted way, the fact that we've been so obsessed with ESG, green energy, and so forth, this initiative to curb fossil fuels have led to a lot of underinvestments in oil exploration, fossil fuel exploration over the last 2 years, and that's worsened by COVID. So now suddenly we find that, hey, things are coming back, but we don't have enough oil. So I think at least in the short 3 to 6 months horizon, I think oil can still hold at these levels, if not even chart higher.
And then but then based on the budget, I mean, this is an Isabel question, okay? So let's not count it towards the 3, okay? If you flip it on its sides, PM did announce that there's going to be, more EV vehicles by 2050, all of the incentives for local EV charging stations and producers and EV manufacturers. So how, Watson?
Well, that's good. You guys are young, you guys are the champions of green energy and clean air. I'm all for it. But let's face it, I mean, it's a good endeavor, but I think for EV to become mainstream will take quite years. Yeah, it will take a while. For one, I think EVs are. I'm not a car fan, unfortunately, but I'm of the idea that EVs are premium to combustion engine cars. So not many people can afford. Maybe you can, Isabel.
I know, I'm a poor child.
Yeah, but they're trying hard to encourage ownership because they have exempted excise duty, import tax. I'll be interested to see how much a decent EV costs. When I haven't actually done the research on that one. But
and it must be a local EV producer, not a foreign one, right? That's what the incentives are for in the budget.
Yeah, CKDs.
Fascinating. Yeah. All right. So last question before I let you go. Finally, from Mr. Ko Yi, K-O-Yi. With many questions on inflation, but I just chose this one. With many taxes applied, plus worldwide supply chain issue and high oil and raw material prices, will there be runaway inflation for year 2022? Maybe not runaway inflation. Will there be extraordinary high unexpected inflation?
Yeah, I think there's a worry. I think a lot of people worry that you could end up in an environment where inflation goes up so high beyond expectations, and then we end up in a situation when many countries stagflating, is it? There's a word. stagflation is a dirty word now. Yeah, there's a risk that we might, end up in a stagflationary environment. But I don't share that belief because I think part of the reason why prices are going up is because of a supply issue. There is to a certain extent a supply side bottleneck because of the pandemic and the measures to contain it. It has basically reduced the capacity of a lot of the ports and logistic supply chain, and so this logistic system couldn't deliver goods in the amounts that they used to. So now that bottleneck is being gradually eased, and hopefully as that happens, then you can get more supply coming into the market, and that will have a dampening effect on rises. It will be 2.5%. I would worry if it stays above 3% in the US for, let's say, 6 months. That would make the Fed start to bring forward the increase in interest rates. So that will be a big adjustment downwards for valuations of a lot of assets. Yeah. Right now, it's actually above 3 already. I think I've been seeing something like 3.4 headline. But bear in mind that even Jerome Powell said that he sees this as transitory. So he's expecting that this 3.4 thereabouts to come back down closer to 3 and below. But it remains above 3.5% for most of 2022, then I think he's probably going to be forced to bring forward Fed funds rate increase into 2022, because right now the plan is to raise rates only in 2023 at the earliest. Yeah. So the prospect of a rate rise in 2022, I don't think is built into the market yet. Yeah.
Fascinating. Thank you so much, Watson. I know I promised you 10 minutes of your time, of your precious time today, and 3 questions, but I totally cheated by asking you additional penetrating questions, and we could listen to you for the next few hours, to be honest. Thank you, Watson. Thank you to everybody who asked some really great questions in the chat that we didn't get to, but I tried to summarize as many. Tony, Junfa, and Sarah as well. Mr. Koh Huat Soon from Kenanga's head of research. Any parting words?
Well, thank you for having me this morning. Short it may be, but I've enjoyed it, and I had the chance to see the sort of stuff you're discussing is very encouraging to see you guys learning. And it takes a great mind to be able to twist and turns and acrobat around warrants. It's beyond me. So it's good to see your young minds being so active. Keep it up. Good to see you guys, and hopefully I'll be able to join you again at some point in the future.
Absolutely. I would be thrilled to have you on more often. Thank you, Watson. Have a great day today, and we can't wait to share your research report on Telegram once you publish it officially through Kenanga Research.
All right then. Bye-bye, Isabelle. Bye-bye, everyone. Have a good weekend.